These are in listen-only mode.
Welcome. Welcome everyone to the fifth and last of our 5-year birthday celebration webinars of LGT Venture Philanthropy this afternoon with the title Impact Investing, Outlook and Trends. Over the course of the day, we have already had 4 interesting webinars covering a broad range of topics such as insights from our portfolio organizations, money is not enough, why supporting social enterprises with know-how is equally important, 5 years of LGT Venture Philanthropy with key learnings and challenges with His Highness Prince Max and our board, and a leader's visions of a sustainable world of tomorrow. Before we start, I just want to mention that these webinars are recorded and together with the presentation will be made available to all of you listening out there in the coming days. My name is Oliver Karius. I'm a partner here at LGT Venture Philanthropy and I will be moderating today's session. The question that we will be looking to address in the next 60 minutes is impact investing aims to solve social and environmental challenges while generating financial returns. But is impact investing here to stay? That question will be answered with our esteemed panelists later on when we go into the actual presentation. We'll also be looking at the status, outlook, and trends of impact investing to get the discussion going. The webinar is structured into a number of parts. The first part is a brief introduction to the speakers, an introduction to LGT Venture Philanthropy, and then we will spend probably about 20 to 25 minutes at setting the scene with Amit Buri from the GIN and Randall Kempner from the Aspen Network for Development Entrepreneurs. And then we have, we'll be taking the questions that all of you listeners out there have been sending in for the last 25 minutes, looking at lessons learned, trends, and outlook. So before I start, Amit, could you introduce yourself, please?
Sure. Thank you, Oliver. My name is Amit Bori. I'm a Managing Director of the Global Impact Investing Network, and I'm thrilled to be speaking with all of you.
Thank you, Amit, and welcome. Randall, would you like to introduce yourself quickly?
Sure, I'd be happy to. First and foremost, happy birthday, LGT. So thanks for letting me be part of this. And I'm Randall Kempner, the Executive Director of the Aspen Network of Development Entrepreneurs, or ANDE is our acronym, and that's what we're known as out there. So again, thanks and look forward to the discussion today.
Welcome, Randall. Thank you for joining us. So we are an impact investor. LGT Venture Philanthropy is celebrating its 5th anniversary today. We essentially focus on what we say is those 4 billion people living on less than $2 a day. The income gap and the inequality gap in the world out there between the haves and the have-not is increasing and widening. And we want to address that. We want to close that gap by supporting fast-growing young enterprises with innovative social and environmental solutions that improve the quality of life of less advantaged people. We do this in 3 ways. We, on the one hand, invest ourselves directly into these fast-growing young enterprises in emerging markets. We also work with clients of LGT and external clients to help them realize their personal aspirations. And we look to inspire by showcasing these innovative solutions to get more people excited and involved in supporting to improve the quality of life of less advantaged people. Over the course of the last 5 years, we've invested around $14 million into 27 organizations in Latin America, Africa, India, Southeast Asia, and China. And collectively, these portfolio organizations improve the lives of approximately 7.9 million people. We do this with our global team of 23 passionate investment managers who actually are from the regions in which we operate and who are sort of our ears and eyes on the ground to find deals, to analyze those deals, and then to also work with our portfolio organizations of the duration of our investment. We see ourselves as a patient long-term investor, so it's very much about a long-term support financially and non-financial support of our portfolio organizations to help them in their vital sort of growth phase as they scale up. As today's topic is impact investing, I thought it would be useful just to set the scene. Some of you out there might have already seen this diagram. This is essentially the spectrum from grants on the left right across to Main Street market type and market investing, so what is called finance first. And as you can see over the last couple of years, this middle space, the grant making and the social investment space, has opened up and is offering a range of very interesting investment opportunities. As you can see, impact investing there spans both the social purpose organizations and traditional business, and we at LGT Venture Philanthropy are focusing mainly on the spectrum from providing strategic grants to doing debt and equity investing into socially driven businesses. And with that, it's my great pleasure to already launch us into the discussion. Amit Buri will give an oversight or an overview, sorry, of the GIN. Amit, thank you very much for joining today, and we look forward to your presentation.
Great, thank you. And just to give you an orientation to my remarks, first of all, we're thrilled to talk about this with all of you. I will give a little bit of background on impact investing and just mention what the GIN does at a high level. And then I'll talk a little bit about the trends we're seeing in the market and how we think about impact investing evolving, and then finally land on the GIN's role in that evolution. And then, of course, I'll turn it over to Randall. But just to start on the next slide, please, Oliver, just to anchor everyone in the definition of impact investing. So I won't read this all to you, but I will emphasize 3 points when you think about an impact investment. One, that it is an investment that's made to generate measurable social and environmental impact as well as a financial return. So this is not philanthropy, and it is designed to generate returns that, bringing me to my second point, that range from below market returns to market rate. So this includes a variety of investors with different financial profiles. And then finally, it can happen both in emerging markets and developed markets. And so this is quite a broad industry, if you think of it in that way, but it encompasses a lot of things that fundamentally are trying to achieve a strong impact in addition to a financial return. And next slide, please. And now the way we think about the GIN is that we are an industry body for the impact investment world. We are, actually just back just one, please. We are a nonprofit organization dedicated to increasing the scale and effectiveness of impact investing. I'll talk a little bit more about how we do that later, but I do want to emphasize that we do not invest ourselves, nor do we kind of match deals to investors, but rather we try to develop the overall ecosystem for impact investing and support practitioners throughout the world. And next slide, please, Oliver. And just to give you a flavor for the types of organizations that we work with, and I won't read all of these off to you, but it is quite a diverse market, and I think that's one of the strengths and, of course, one of the challenges when we think about weaving this together into to be a global industry. It includes major banks, such as JP Morgan and Morgan Stanley, and UBS, of course, right in the backyard of LGT. It also includes major foundations, boutique firms that are solely focused on impact investing, as well as large development finance institutions like FMO out of the Netherlands or CDC out of the UK. But what's exciting about these is that they all bring a variety of tools and resources and strengths to the market. But of course, there's a lot of work that needs to be done in terms of weaving all these strategies together to make sure we realize their full potential. Next slide, please. So just to orient people on how to think about impact investing, this is drawn from a framework that was developed by the F.B. Heron Foundation, which is a New York-based foundation that invests primarily in the U.S., but also has made some investments in Africa. And the way we think about impact investing to be very explicit, is that you can think about, it does not include grant support, but it includes a variety of instruments that cut across traditional asset classes, from the high-risk equity all the way down to the low-risk cash, both in below market as well as market rate investments. So this is a very, this gives you a sense of the diversity of strategies that can be deployed in the various sectors and geographies of impact in which impact investors operate. Next slide, please. So this slide really starts to get at what, when we think about the impact investing industry, how do we think about its actual evolution? And this is actually work that was sourced by the Monitor Institute in a report they published in 2009. And for full disclosure, I was a member of the team and employee of Monitor who worked on this project. But what we looked at the time was trying to figure out, this is, think back to 2008, which is just a few years ago, but the impact investing world was quite different. There was a lot of very interesting pioneering work being done by folks like LGT Venture Philanthropy and many others around the world. And what we saw was that there was a tremendous amount of potential for this activity, but it was not yet, and still is not, a way that most people invest their money. And so we're really at the tip of the iceberg in terms of the potential for impact investing. And so the task we put to ourselves is to think about what would it take to get more people to become active impact investors, and how do we make this part of the way that everyone thinks about their money. And so it's really a tremendous and powerful complement to other efforts, whether they be philanthropic or government-driven, to address social and environmental problems around the world. And what we determined was that we needed to really think about this through the lens of an industry. And if you look at the flow chart at the top, we studied other industries and determined that you can segment the evolution of an industry across 4 stages. One, of course, is uncoordinated innovation, people developing business models that are and testing them and making them viable. And then the marketplace building is, when we actually start to weave together these disparate business models and these fragmented approaches to start to have a real market where you have norms and standards and people can understand how deals get done in a systematic way and start to have expectations around returns and fees and all the other things that make markets ranging from venture capital to home mortgages work at large scale. And then you get to a point where it's capturing the value of the marketplace. And that's when we really start to see things pick up at a much greater clip. And then finally, you get to a mature industry, where this is just the way that people invest their money, and the growth is relatively slow, but it means that we've actually started to achieve tremendous scale. And the way we thought about impact investing is that we're in this phase of marketplace building. And the question that we put to ourselves is, what would it take for us to accelerate the growth along this trajectory? And if you think about venture capital, it really started in the 70s as a very informal industry. And now it's the way that most institutional investors will make an allocation for their portfolios. So in about the span of about 30 years, it's undergone a tremendous evolution. And similarly, a field like microfinance started with grants and experimentation in the 70s, and now has evolved dramatically, where it is the way that major institutions are allocating significant sums of capital to the tunes of hundreds of millions or billions of dollars. So what we set ourselves the challenge is to think about how can we move along the impact investing industry so that it does become widespread and has the impact at scale that we all believe that it can have. Next slide, please. Now, Oliver asked us to talk a little bit about some of the trends that we're seeing in the market. And so I think one of the things a few things I'd like to emphasize. One is that just from a few years ago, when the GIN was launched in 2009, we're already seeing that it's not just the usual suspects anymore. A whole host of new players have entered the market, ranging from major banks to development finance institutions to high net worth individuals who are now looking to deploy their assets in this way. We have seen a lot of traction in terms of the market organizing and becoming more coherent. I think we have a long ways to go, and so that certainly we're not done and can't declare victory yet. But people have organized around standards, which I'll talk a little bit more about shortly, and there's also been increasing kind of sophistication around products and services that are offered for investors. And so I think the impact investing field is really starting to increase its ability and capacity to meet different types of investors where they're at now. And a huge trend has been that government is engaging in new ways. And that's not just specific to the U.S., but we've seen tremendous inroads in Australia, of course here in the U.S., with both domestic and international agencies supporting impact investing activity. In the UK, there's been a tremendous amount of activity, primarily focused domestically to date, with the creation of Big Society Capital. And then in countries like the Netherlands, government has always played a critical role in supporting things like renewable energy investment. So this is an increasing trend which provides a powerful complement to the private sector actors who are, in most cases, leading the charge for impact investing. Next slide, please. Now, despite all that progress, we still have a long ways to go, and these are the types of things that it generally focuses its attention on. So while we do have a growing set of active impact investors and a great who are following some of the pioneers in this field, most people in the world don't know that impact investing exists, let alone that's an option for their own investments. And this includes major institutional investors as well as individuals. So we have a long ways to go to increasing awareness. But then once you've achieved awareness, it brings you to a second challenge, is that it's really hard to get started. It is not easy to figure out where to get started from an impact investing standpoint, in part because it challenges long-held notions of how we think about our money. People typically think about giving away a small portion of their money and invest and trying to maximize impact, and investing the rest and trying to maximize profit. And so getting over those conceptual barriers and then to the very practical ones of what are the products out there that fit my needs is still a huge challenge for the field. The third point is really about there's not a great evidence base yet for impact investing. And so a lot of people who are interested wonder, how do we actually become active, and what's the business case for doing so? What's the track record of performance, and how much activity is really happening when you get a layer below all the hype and excitement about this practice? And then I think it's the last 2 points are really that we do need a stronger learning community given all these challenges, so that the innovations that are happening in Switzerland and in India and in Africa and in Canada are all being shared. And then finally, I think it's a critical role for us to think about how are we actually having an impact. What is it, though we have great aspirations and great intentions, how do we know that we're actually having a disproportionate impact beyond just investing as business as usual? And so on the next slide, I'll talk a little bit about how the GIN actually lines up its activities against addressing each of those needs. And so we have a program designed to address every individual one of those challenges, and then of course some other activities that didn't make it on the slide. But on the awareness front, and actually, if you don't mind just switching to the next slide, Oliver, to be a bit more tangible at our traction to date, in terms of awareness, we have our outreach and our research efforts. And so far, we've had significant inroads on the awareness front. And so we've done media coverage, played a role at least in getting media coverage in the Financial Times, The Economist, Forbes, Financial Advisors, local publications in a variety of markets around the world. And so this is becoming something that's more increasingly known. We've also focused on really trying to increase the amount of data-driven research that's available. And so we've published reports with a number of partners, including JP Morgan and Monitor and others. ImpactBase as a product that it's an open platform. It's restricted to accredited investors, but it's a way that they can identify investment funds and products. And we have nearly 200 vehicles listed to date, and over 750 accredited investors from all around the world are using it. I mentioned our Investors Council a little bit before, but it represents a number of major institutions who are all sharing and learning from one another. And then finally, IRIS is the Impact Reporting and Investment Standards. And that is a set of standards for social and environmental performance that we have propagated to help advance the sophistication in the field and the standardization of how we track metrics, which enables us to have a global conversation about which types of investments are performing better along certain indicators. And it will, as a segue to Randall's presentation, we'll just acknowledge that the Aspen Network for Development Entrepreneurs and Randall's team has been a critical partner for us on IRIS, and they've actually adopted IRIS and helped propagate that amongst their membership. So I think just to wrap up and hand it over to Randall, this is a really exciting field with a lot of potential, and we also have made a lot of progress in the past few years, but we have many, many challenges ahead of us, and look forward to engaging all of you and helping address them. Thanks.
Amit, thank you very much for this fascinating overview, and congratulations to you and everybody at the GIN for taking on this challenge to actually try to develop a full marketplace with everything that belongs to it, and not just in one region but globally. So, congratulations, and we wish you for also success for the next years, and are very interested to shape the debate and contribute a very active role in this manner. Now, I would like to thank you, Amit. Now, I'd like to hand over to Randall. I think, as Amit has pointed out already, in investing, it's good to have all these standards and the research, etc., but it's critical to also have investable organizations that actually do deliver the impact that we all look to it to support. So, Randall, over to you for an introduction to the great work that you're doing at the Aspen Network of Development Entrepreneurs.
Great. Thanks, Oliver. And again, thanks for the opportunity to be here today. Let me get you to switch slides so we can get to maybe the first one that shows a description of Andy. There we go. So what Andy is a network of organizations that propel entrepreneurship in emerging markets. The way to think of us vis-a-vis GIN and impact investing is that we also are marketplace builders, but are focused on a specific segment or vertical of impact investing. And we define that vertical as focused only on emerging markets, and also focused only on those businesses that we consider to be small and growing businesses. And these are firms that are explicitly larger than micro enterprises, so they have at least 5 to 10 employees, up to about 200. And they are led by growth-oriented managers, folks whose intent is to actually grow those businesses so that they can have increased employment impact and often address economic, environmental, and social challenges in developing countries. So today, Andy has 160 member organizations. Like the GIN, it's a very dispersed group. It might even be even more diverse, and that we have universities who are members, research institutions, consulting firms. The idea is to build an ecosystem globally, and then also build ecosystems in the regions where we have lots of members acting that will support small business entrepreneurs. So we are not specifically created to support impact investors, but we embrace impact investing as a tool that will help these small businesses build prosperity in developing countries. And a large number of our members are, in fact, impact investors, including LGT. So that's a little bit about what Andy does and what we are. If we can go to the next slide. One of the things that we do every year is try to get a sense of what the size of the industry is. And what we've seen over the past kind of 6 years is that there's been a major growth in investment funds that focus in some way or another on small and growing businesses in emerging markets. And so you see the big jump from 2005 to 2006, and even with the economic downturn in 2009, there were 28 new funds that formed that focused on this space. So we see this as a positive sign. The growth and new fund formation may be leveling out a little bit in the past few years, but what's been nice is that while the number of funds is sort of stable and has grown significantly in the past 5 to 6 years, we can look at the next slide, we see that the size of the fund that these new funds are trying to raise has actually grown. So there is, some signs of greater confidence in terms of the amount of money that these individuals and funds are trying to raise as they want to address small and growing businesses in developing countries. And more encouraging even than the size increase is what we'll see on the next slide, which is the acceleration of actual investments taking place. So one of the big challenges and I think fair observations about the impact investing space is that thus far there has been much more talk than action. There are a lot of organizations, both large and small, both well-known and unknown, that claim to be impact investors. But there is still a lot of work that needs to be done to actually see investments. And what we've seen, and this is information based on an Andy survey of just our members, so it's based on 37 funds that we were able to get full data for, was that at least in this small subset, 41% of the total capital that those 37 funds have invested overall took place last year. And slightly more than a quarter of all of the investments were made last year. And 2010 was the second biggest year to 2011. And so we are beginning to see some acceleration, which is positive for the space and gives us hope, makes me feel like I have a good reason to go to work every day. But despite this growth, and we can take a look at the next slide, despite this growth, SGB financing is tiny. So this is the chart that takes a look at the total target fundraising side for funds focused on small and growing businesses, that's the blue dot, versus emerging market private equity and microfinance. And what it shows is that over the past 10 years, the target fundraising, and again, that's not necessarily actual, but the target fundraising size is $20 billion. That's less than 10% of what emerging market private equity funds have been attempting to raise, and it's about a quarter of what microfinance institutions loan on an annual basis. So as segments go, we're a relatively important one in the impact investing space. But as Amit mentioned, and I'm trying to reinforce, it's still very much of a nascent sector and one that we hope will grow significantly in years to come. We can take a look at the next slide. One of the things that we do every year as well is we ask all of our members to give us their perspectives on how easy or hard it will be to raise funds over the next few years. And what we can see in the first graph here is report back on the expectations that two different types of members, those that raise investment capital and actually make investments in SGBs, and the second are those that provide capacity development support and don't actually make investments but are providing some sort of service, be it training or capacity development, very specific technical assistance to small and growing businesses. So we asked both of those groups how easy or hard will it be to raise funds. And in 2011, those raising investment capital thought that 2012, 44% of them thought that it would be easier to raise money than it was in the previous year. And when we asked them to look back, it turns out that only 29% of them actually found it easier to raise funds. The capacity developers were slightly less optimistic. They thought, 30% of them thought that it would be easier to raise funds, when in fact, in reality, only 18% of them found it to be easier to raise funds over the past year. And so we've now asked this question again and asked them to look forward. And again, those who are raising investment capital are more optimistic. 29% versus 24% think it will be easier as opposed to harder to raise the funds. And the capacity development guys are actually pretty pessimistic. They actually think it will be more difficult to raise funds for capacity development services next year than it was this year. And I would just highlight this point for a second, and something that Oliver mentioned and I know you've discussed earlier in the day today. For at least the small and growing business sector within impact investing, one of the key aspects of success is the recognition that it cannot be done purely by giving financial capital to these firms. We're talking about small businesses that need something else. They need some sort of capacity development in almost every case if they are actually going to scale and thrive. And if we're trying to address social and environmental challenges, we need to recognize the need and the real acceptance that some sort of subsidy to help these companies is equally as valid as making donations to nonprofit organizations that are trying to address the same challenges. So one of the things that Andy is concerned about, and we try to advocate for to DFIs, to foundations, is the need to integrate investment and capacity development services. And it's particularly challenging to get the capacity development side funded, as this data shows. So with that, and that point, I think we can turn it back to you, Oliver. And I know on my end, I'd be thrilled to answer any questions about Andy and the impact investing space.
Sorry, Randall, I was on mute. I apologize. Randall, thank you very much for highlighting and sharing your insights from also a member's perspective, and providing all of us with some vital stats about the actual size of the market, or sort of more market sentiment for growing the market. Now, we actually discussed the importance for capacity development in one of our earlier sessions today. And from our experience working with our 27 portfolio organizations to date, the key message that we always get back is, yes, financing is really nice and really important, but please provide us with the capacity, with the management support, with the know-how, with access to networks, etc. Because even operating those businesses in tough environments is difficult, but doing that even with a constraint on talent is even more difficult. So thank you for underlining that with your interesting stat. Thank you very much to both of you. I think that set the framework very nicely for our discussion. We've been getting a lot of questions in. Before we start fielding those, I have a question perhaps to get the discussion going. And this is to perhaps both Amit and Randall. If you look back over the last 4 years since the evolution of, or the setup of Jin and Andy, we've heard about market size. Is there any indication of how much impact these $4.4 billion that were invested in over the last couple of years have actually achieved? I mean, are they real case studies? Is there an attempt to capture that impact so that we can use that impact to show other mainstream investors what this is about? Do you have any indications on the impact front?
I'm happy to try to address that first. I think the short answer is we do not have any systematic way of assessing the impact of that, of all the capital that's been invested to date. And in part, that's why we've created the IRIS initiative, is that we have, I mean, ultimately everyone is tracking impact in different ways without the existence of standards. And so given that, IRIS is trying to play a role to standardize performance data so we can start to, track the performance of various investments and then aggregate that up to a more systematic view of the market. Now, we've made a lot of headway in that, and Andy's been a close partner in helping us to both spur the adoption of IRIS and also to aggregate the data across the Andy membership. So that's something that's in the works, but in terms of a broad systematic view, we still don't have it, and won't, I think, in the near term. But then the second point that you'd made around and kind of case studies and anecdotal, there are case studies about the impact that's been happening, that's occurred to date. But one of the challenges is that for an investment that's made today, the impact will often be seen over up to and maybe even beyond a decade out from this point. And so while we can start to understand the impact that investments are having in an interim basis, we won't have a complete picture of that for investments that have been completed in the last 4 years in most cases. But we are doing a lot of work at the GIN, and many of our partners are as well, to start to understand the impact that specific investments are having.
Amit, Randall, from your experience working with your members, Any wonderful examples about how much impact has been created?
Yes, I would first of all agree with Amit, which is realistically at this point the best that we can do is talk much more about input metrics and some initial output metrics as opposed to the real outcomes. So I cannot say, as much as I would like, that my work at Andy and our work has led to millions of people living better lives and being less poor, because frankly the work hasn't been going on long enough to have the true measurements of those things. So we can talk about, from the Andy global level, the amount of investments that have been made, so $750 million and 1,075 investments last year, $112 million in capacity development, that 21,000 small and growing businesses have received capacity development services, and 2,200 have received direct investments from Andy members. And those numbers are all going up, and they're all positive. But it's, I'm very cautious about saying, we figured this thing out. Now, I would say that there's some organizations that I would point you to that have done some impact studies on their own work, like Root Capital and the Small Enterprise Assistance Funds. SEEP in particular has done work that talks about how their investments have led to kind of a multiplier effect of up to 9 times in terms of the amount of revenues that their companies have been able to generate, and also significant employment gains have been created by the companies that they have invested in. So there are one-off studies that are out there, but it's hard to make systematic conclusions at this point. I would say this is something obviously that Jin is very involved with, and Andy is both working with the Jin and separately. We've launched a research initiative this year, but we're going to be granting $700,000 to academic researchers, often working with practitioners, to try to make the case that investments in small and growing businesses do lead to prosperity creation in developing countries. Again, we're probably looking at 2 to 3 years before we have the kind of final results from this, but we're hoping to strengthen the academic base so that it's not just anecdotal evidence that we can offer at events like this.
Thank you. I think the specific point that was made around the kind of long-term, I think is a really important one, because the impact that we're seeking to create will manifest itself in the long term, but sort of investment decisions have to be made more in the short term. So we certainly see that in our ongoing debates in our team and with our board, is this debate around the impact that is created versus that might be 6 or 7 years out versus the actual financial decision that has to be made in the short term. So I can guarantee it makes for some very fascinating discussions here in the team. I would like to start perhaps with fielding some questions that we've been getting. So thanks very much for sending those in. If we perhaps zoom out a little bit, and this is maybe a question, well, also a question to both of you, but if you look at the kind of global evolution on impact investing, we at LGT Venture Philanthropy, when we started 5 years ago, noticed that there was hardly anything going on in Latin America. And just over the course of the last 4 years, we've had a tremendous spurt of activity happening in Latin America. Could you highlight some of the most interesting developments globally that catch your eye, where you think, well, what the folks are doing in Southeast Asia is particularly interesting, or you mentioned Big Society Capital in the UK. Could you highlight a couple of sort of hotspots?
Sure. This is Amit. I'd be happy to, and I think one of the things that's a tough question to answer, because I think in different markets we've actually seen really exciting activities. So there's a long list. But just to highlight a couple of areas that I think are really exciting. So one, of course, as I mentioned earlier, and you acknowledged that the Big Society Capital in the UK, which is essentially an intermediary that's been financed with up to £600 billion of capital that are to be placed within the UK to support the development of intermediaries focused on impact investing. So it's a tremendous pool of assets and almost a supply shock, if you will, of assets coming to to work on fostering the development of a domestic ecosystem there. Across the world in India, the government is preparing to launch the India Inclusive Innovation Fund, which has a different orientation, but is also focused on supporting innovation that is inclusive of those populations that are not kind of well incorporated into the domestic economy. So I think those are some interesting areas of activity that are quite exciting. But I think you could pick any market and really point to some exciting actors who are developing interesting models. And so I think we could have a whole call just on that section. But I think one of the things that's most motivating about this field right now is the amount of innovation coming from different angles in different markets responding to local needs.
Yes, Randall, I would agree with Amit's point, and you could clearly look over the past few years and make the statement that impact investing is hot or impact investing is cool, whichever adjective you think is more appropriate. Look, you've had the G20 Finance Challenge that they left on for small and medium enterprises. OPIC here in the United States had an impact investing call. DIPID, as Amit well knows, is going to be announcing a major call on impact investing either later this year or early next year. So the DFIs get it. And then you're seeing lots of innovation of the smaller organizations that are trying to address challenges that face the industry. So Village Capital is a neat group that is using kind of an incubator model where they bring together social businesses that work together as a team, and then they vote on who should receive funding at the end. There's been a lot of activity to try to build out platforms to support investment by retail investors. So TriLink Global is doing that in the United States, Mission Markets, trying to build the opportunities to actually make investments. So there's just an incredible dynamism taking place, and I think you're finding it not just in the United States and Europe, but increasingly being driven by organizations based in emerging markets, and we're very excited about that trend at Andy.
And as we, thank you, Randall, and as we sort of look ahead into the next, or look into the future, the next 5 years, where do you see the biggest growth in terms of asset inflow coming from? I mean, if you look at the different types of asset owners, ranging from high net worth individuals, corporations, governments, employees, retail investors, foundations, and a whole range of others, where do you see the biggest push coming from? Because essentially, I think as an industry, if we take Amit's sort of market growth analogy, if we want to move to maturity, I think it would be wonderful if we can get some of the large pension funds at least get 1 or 2% of their investments flowing into impact investing. Where do you see currently the biggest interest in inflows, and where are we moving to?
Sure. I mean, I think I absolutely agree that it would be great to get some larger pension funds involved, and I think there's a handful of those who are already involved out of the Netherlands, both PGGM and APG, and in the U.S., TIA, CREF, and of course others around the world. But I think my guess is in the next few years where we'll see a lot of growth is actually amongst the high net worth individuals. I think the retail space, as Randall mentioned, there's an increasing offering of products, but I think distribution will be a big challenge in the near term. But that will eventually scale as more product innovation happens at that end of the spectrum. I think with institutional investors, there is increasing activity, but it will also, I think they will be kind of one of the latter groups to follow, in large part driven by their need to see a demonstrable track record. And so where there are sectors of the market where that has evolved, then they're more ready to make a play, such as like green technology and microfinance. But in other more nascent sectors, they will be kind of a late adopter as opposed to an early pioneer. And then finally, as come up in a number of the comments so far, I think government will play an increasing role, and it already is. Governments around the world are making significant moves, and we'll continue to see that. It will be interesting to see, though, how the push around austerity affects that. And so I think a little bit of kind of the global financial insecurity that's felt right now can have a significant impact on governments and on institutional investors. So for all those reasons, I think kind of high net worth individuals are the place that I'm really excited to watch as they act through family offices, family foundations, and private banks in the next few years.
Thank you. Randall, from your perspective, particularly focusing on emerging markets, do you witness an increased interest from high net worth individuals and government in, let's call it, the global south that are interested to invest?
Yeah. Well, so I think what's clear today is that the vast majority of the money that's flowed into this part of impact investing has come from development financial institutions and then to a lesser degree foundations. We have very small amounts of money coming in from high net worth individuals and from institutional investors, so the more private sector investors. If this space is going to realize the potential that Amit described and we hope we'll see, we've got to get more private investors engaged. And I do think that you're going to see more high net worth individuals coming in, particularly as some of the platforms that I mentioned become more established and it becomes easier. Right now, it is really hard to find investments, certainly direct investments, and even investment funds that as an individual that you would want to invest in that might meet specific goals. So the marketplaces are being built. There is greater transparency and information, but I think we still have a ways to go before we get there. And I also think that it's critical for us to actually see some success where some well-known institutional investors or well-known family foundations can show that they've had success in making this kind of investment. And hopefully we'll be able to see that soon as well.
Thank you very much. I really appreciate also the pointing out, the difficulty of doing direct investments oneself and the use of platforms and funds to actually facilitate that capital flow. We just looking at where to invest. If I look at the recent report that was published just a couple of days ago called Accelerating Impact by the Rockefeller Foundation, a key challenge that they mentioned and which is fully resonates with our day-to-day experience is that there actually are too few investment-ready projects and enterprises to sort of really enable the optimum placement of this new capital. Now it seems that we are entering a market phase where through all the awareness raising, people are, particularly on the capital side, are getting very excited. But on the actual investment ready side, it's like, where are the deals? Randall, what is the Andy doing? You mentioned capacity development, but what other things could we as a sector do to actually build this the investment ready enterprises?
Yeah, so a couple of things come to mind. I mean, one that Andy is working on, first and foremost, is there is a belief that there are investment-ready enterprises that aren't yet being discovered. And we think that leveraging our regional chapters in Kenya, in South Africa, Brazil, Mexico, and India will help our members come together to reduce due diligence costs in finding those companies and also help them come together to actually make decisions to invest once we've been able to find them. But your point and the one that I made earlier is critical. I do think that the expectations of investors to find companies that are just perfect and ready to go is somewhat misguided, at least as you're talking about small and growing businesses. You may be able to find them with some large firms. These are firms that are going to need more work than a typical venture capitalist sitting in Geneva or sitting in Silicon Valley is used to. It's harder work to do it, and you're going to have to spend more time and money to make it happen. I point out one interesting model which I'm excited about that's being launched by the World Bank Development Marketplace in East Africa right now, where they're working with a group of Andy members, investor Andy members, to identify those companies which made it to the investment round but were declined in the end. So the kind of finalists but non-winners in the investment space. The idea is that the World Bank is going to develop a fund to help address the specific challenge of those companies, whatever it is with each one, that made them non-investable. So the idea that you can start to find those that were almost there, get them the specific support they need, and then re-get them into the system, I think is one that's promising and one that can be done by a variety of organizations in a variety of places.
Excellent. I think it's just fantastic if you start listening about all those initiatives that are happening and the kind of creative ideas that are coming out. If one looks at the type of investments, I mean, you mentioned that currently we're at 20 billion. Now, is that a factor because we are actually doing smaller investments into smaller deals at smaller stages? Or because if we compare it one-to-one to emerging markets, I mean, doing an investment 50 million into a project finance deal, it's very different to doing a 5 million investment into, you know, a smaller healthcare deal in Latin America, for instance. Do you see across that spectrum from seed to very large any patterns emerging?
Well, let me take it first, and then Amit, why don't you jump in? I mean, a couple of things. One, to clarify, that 20 billion is the amount of funds that investment funds had hoped to raise. So it's been less, and certainly less investment than that. So it's even smaller than 20 billion. And why it's so small is in part because of the challenges you've just mentioned, that it's hard to find good investable businesses. And even when you do, we're talking about smaller chunks of investment. And then the third element of it is that the type of investment, so the actual financial vehicle being used, often is one which needs to combine a variety of different sources of capital in ways that aren't typically seen, at least in traditional private equity investing. So you're getting quasi-equity investments, your convertible debt stuff, you're doing things which may include some philanthropy investment. So the amount of time that it takes to make these investments often is actually greater than it is for a large investment. And the modality of that investment is more complex. And so that's another space in which Andy and other groups around the world are trying to identify, which is, can we create some investment modalities, investment types that are true and tested, and you can start with some investment documents that have already been vetted as opposed to having to start from scratch every time. So let me end there and see if Amit has something to say, and if I didn't answer your question appropriately, Oliver, let me know.
Thank you.
Just to add briefly, I mean, I think one of the interesting, in terms of where the money is flowing, I think, and the GIN, in general faces more of the kind of the large-scale institutional investor lens, and so this is, a slice in the market. But we've so far in emerging markets, and in developed markets, we've seen most of the capital flowing towards really markets where there's an available kind of pool of managers who have more experience. And so in markets like India, where there's a significant amount of depth in terms of the fund managers, we've seen a lot more activity than in other markets where they're more earlier stage. And that's both in part because more investors want to invest in them, but also because they feel confident in making larger tickets and writing larger checks to those given funds. And so part of that is what I think is really important for the work that Andy's doing and others, is to really help the emerging managers as well get to the point where they can attract larger scale capital. And so I think that will really drive, when we think about a constraint in the market, the intermediation ends up being a very significant one to getting from the actual investor to that $20 billion kind of target size that Randall spoke about.
Thank you very much. I'm just looking at the time, and so not surprised that time is flying. I mean, there are so many things that we could unpack. And in the interest of time, I perhaps would like to sort of cast a very open question to both Amit and Randall. If we look at the definition of impact investments, it's essentially the intention to generate measurable social and environmental impact alongside a financial return. Now, fundamentally, if it's really about, fundamentally, if we look at, listen and read that definition, then the question that always comes up in my mind is, this surely should be the kind of default way of investing, shouldn't it? And it's a question to the both of you. I mean, if we fast forward next 5 years and we're having the same call, surely this should become more the default way of investing. And where do you see, do you agree with that, or do you see that there will always be the other type of investing, that's where one sort of is not able to or externalizes a lot of these social and environmental negative impacts and just focuses on maximizing returns. How do you see the next 5 years panning out?
I'll go first. I mean, I think I would, of course, love if that was the case in the next 5 years, because I think it would mean that the world was a much better place for everyone involved. But I do think that is a long, long journey. If that is the end point, it'll be a long time before we get there. Because the fact of the matter is that most capital and most of the incentives for those who are managing the capital is really built around maximization of profit for a given level of risk. And even kind of quote non-financial considerations such as job creation are almost never incorporated into investment decisions. And so I think one of the things that we'd like to see, of course, is a greater evolution in that on that path. And I do think in the next 5 years it will be significant growth in this market, and I'm really excited about that. But I do think it will be a fraction of the overall investments, and unfortunately a minority of the overall investment activity. But that's I think a sober but hopefully pragmatic kind of prediction for what we'll see in the next 5 years.
Thank you, Amit.
So I agree with what Amit had to say. And I'll be personal for a second. I am speaking to you today from the 12th floor of an office building in Galveston, Texas, where I grew up, in my father's office. He happens to be a capital manager who is a deep value manager. And, he's my dad, and I haven't convinced him about this yet. So I think, though, what will happen is that there is a new generation of financial manager, and there is also a new generation of wealth. And so I think it will take about a generation for this to become the commonplace investment methodology and thesis. And it's not a guarantee. And it won't happen if we can't prove first the financial return. The financial first investors that are considering impact investments are the ones which are still the largest holders of capital. And we need to have the success stories. It'd be great if CalPERS or one of the major European pension funds actually did a significant investment and could say, look, this outperformed the rest of our portfolio. So we're going to need those kinds of examples to show the financial viability before we could actually see the full onslaught of successful investors coming into this space. But I do think that the underlying trends of individuals thinking about this and it being taught more and more in business schools and it being taught in public policy schools and government officials having interaction to it are all in favor. So in 5 years, we'll see some growth. It won't be the default in a generation if we're lucky and we see some success. And Amit and I keep doing our jobs well, and LGT has a bunch of success in their investments. I think we do have a shot at it.
Great, and I think that was a wonderful summary. Thank you, Randall. At this stage, I would really like to thank Amit and Randall for their insights and for this fascinating discussion over the last hour. There are hundreds of questions that we could probably spend our time on, and I hope that we will have the opportunity to do so in the years to come. Thank you very much for participating. Thank you everyone who sent us our questions. Sorry that we couldn't address them. We will try and address them as we send out the presentation and this recording as well. And I wish everybody a wonderful day. Thank you very much.
Thank you.